Hi everybody, welcome to the Finance This Property That podcast. My name is Dion Fernandez and I am a mortgage planner and finance professional. My goal is to empower financial legacies for generations, and I look to do this by using my over 13 years experience in finance and having special guest speakers like financial planners, accountants, buyer's agents, family lawyers who are experts in their field to provide knowledge and free education. And without further ado, let's get into our episode today. Hey everybody, welcome to this episode of Finance This Property That. Very, very, very special and honoured guest today, Rich Harvey from Property Buyer, OG buyer's agent. And I don't say that, he says it himself. He's told me. But Rich, thank you so much for your time all the way in Sydney. It's probably a lot better than it has been in Brisbane for the last few days. Yeah. How you going?
Yeah, really well, thanks. Great to be on the show with you, Dion. And here you guys got pretty smashed with ex-cyclone Alfred. So yeah, really hearts go out to all those that are cleaning and mopping up at the moment.
Yeah, it is. It's been a bit rough, and I honestly think we got away with one. It was
supposed to hit the coast. It was supposed to hit Brisbane full on, but it kind of diverted south and got Lismore and all those Northern Rivers towns as well, unfortunately.
Yeah, and I think by the time it hit Brisbane, it was more like that tropical low side of things. So I think we got away with one. Very wet. I think everything's back up and running. Given the traffic today, it was
back to work.
I think everyone's getting back into it. So, mate, look, thank you so much for coming on board. I am going to pick your brain today.
Go for it. Yep.
Mate, you are one of the best in the game.
Thank you.
What I really like to cover off today is one of the key pain points that I'm seeing with my clients, right? Constantly being frustrated with the lack of good deals on the market, right? And I feel that that's a bit of a perception because I then go, well, who's in your team? Because I know that a good buyer's agent will be able to find deals off market, understands that the best properties don't ever hit realestate.com. So what I'd really like to get out of today is how your methodology around those things and how do you guys go about securing off market deals. But before we get into that, tell us about you, your background, and a bit about Property Buyer.
Sure. Well, a lot to talk about today. Love to share some knowledge with you. So look, thanks again for having me on your show. It's always a pleasure dealing with you, and I really appreciate what you do in the finance world. But to fill the listeners in, I've been doing, this is my 25th year being a buyer's agent. I was one of the first buyer's agents in Australia. Started in Sydney all those years ago. And the reason I started my business, Dion, was that a lot of people couldn't get independent advice. I was myself frustrated. I went to a lot of financial planners to get advice around property, and no one was giving any kind of genuine advice that wasn't tied to commission. Like there were the property spruikers, people selling off the plan. My brother got stung by one of those two-tier marketers that would fly to the Gold Coast and put pressure to buy something and you overpay by 50 grand. And, so I was really frustrated. So I thought, hey, there's a niche in the market to service just the buyer, not the seller, and really give them good advice. And so to this day, the same rationale, same philosophy applies, where I exist to help people make better property decisions. If you want to nut it down, that's my mantra, to help people make better property decisions. Whether you've got 450 to spend, whether you've got 2 million or 20 million, we help clients across the whole spectrum of the budget range, from first home buyers, first time investors, upgraders, downsizers, commercial buyers. So my buyer's agency is holistic. We've got 32 staff around the country now, offices in all the states. I have served previously as the president of the Buyers Agent Association of Australia, and I really worked hard in that role to bring awareness of who buyers agents are and what they do, and secondly, to improve the ethics and the foundations and professionalism of our industry. And I also served as the chairman of the Buyers Agent chapter of the Real Estate Institute for about 11, 12 years, and really helped to get buyers agents recognised on contracts of sale in all sort of ranges of manner of transactions. So look, I'm now 55, I've got a substantial portfolio. I could retire if I wanted to, but I'm not going to, because I just love helping people buy properties, Dion, and doing podcasts like this,
No, it's amazing. And I think with someone of your experience, getting what's in your head out. I that's why I do this podcast, because I want to share my knowledge with people around finance. But my specialty is not buying property, as in it's not advising on property. That's a completely different type of specialty. So, mate, years of experience. It's great to see that you are giving back as well, because that's really important. And both our visions align as well. My vision is to empower financial legacies for generations. So you or buyers agents play an integral part in that, right?
Yeah.
So, let's get back. You go back to helping people find the right property, right? So, give us a little bit about this breakdown. Like, you're going and finding the right property. Where do you find the right property? Like, what is this off-market thing that people keep going on about? Well, and what is the definition of off-market?
Yeah, okay. Well, let's talk about what the right property is firstly, because I think a lot of people, might have cash in the bank or come to you, get a pre-approval and say, hey, look, I got 800 grand to spend. Let me just jump on realestate.com and start searching. And they've got to take a step back and find what is the right property for you and your situation. It's got to be very much around building a strategy. Most people, when they're searching, don't have a strategy. They're searching blind. They're kind of going, oh, that one looks good, or that one's got a nice kitchen, good outlook. Yeah, that possibly is a good investment or a good home. But you've got to start with the strategy. So what I do with all of our clients, we take a step back. We look at their goals, look at their objectives, look at their budget, and then we work out what we call a buyer's brief and a strategy. And then from there, we start searching. We go, okay, if this is your budget, then this particular suburban location is going to achieve your goal. So that's the first thing. So it's the location, and then it's secondly the property type. So your budget may not extend to a house. You might have to get a townhouse, or if you can't get a townhouse, it might be a terrace or an apartment. So getting clarity up front on your goals, your objectives, your needs, your wants, that's super important. It's a bit like starting the year going, oh, here's my New Year's resolution. I want to get fit, right? Well, what does that mean? Okay, like how many kilometers are you going to run? How many weights are you going to lift, right? How many gym sessions are you going to do? So let's get clarity on your goals and let's put a plan around that. And that's exactly what we do with property. To your other point, finding the right property, yes, it is very frustrating. And that's why I've got a great business, Dion, because we help people get exactly what they need. And to your point around off markets, like what you see on the main portals, Real Estate Domain or Real Estate View, is not a tip of the iceberg. It's still a substantial amount of properties, but there's a heap of properties out there you'll never see advertised that we get access to. So when we get a client brief, we send out that brief to our extensive network of contacts. And literally within minutes, we're getting in our inboxes opportunities that we can then send to our clients. So one of the key success factors for us is that it's what I call strength of relationship and depth of relationship across multiple suburbs with selling agents. So not everyone will use a buyer's agent, I get it. Some people want to do a DIY and that's fine. But those that are smart and want to leverage time, knowledge, networks and resources will go, you know what, it's worth paying the fee because I'm going to get access to more properties. They'll be able to evaluate them. They'll secondly be able to negotiate them. But let's go back to the definition of off-market just briefly. So there's a true off-market where there's actually no agent involved, and we even get vendors coming to us directly. So we actually don't even have an agent involved. We can sell it, no agent. So we've done multiple transactions that way. Secondly, the vendor's gone to an agent, but they haven't advertised it, and they're just sending it out to their database of shortlisted buyers, and that's again a true off-market. And then there's pre-market, or about to be listed properties. So what they often do is a pre-market campaign off-market, just send it to the database, and then if they don't get an offer, and then they do a full campaign. So you just need to be aware of the types of off-markets. And an off-market doesn't necessarily mean it's a better property, but one advantage for the buyer is there may be less competition when it comes to putting in offers.
Yep. And I think you've nailed it. There are different layers of off-market, and that's definitely one thing people kind of don't understand. And let's be clear, if it's on realestate.com, it's not off-market.
No.
You can't say you've got an off-market opportunity. And this is, it drives me bananas when you see all the, there are a lot of buyer's agents, right? Like, oh, we secured this off-market, but you look at it, you do a search online, and it's like, it was advertised on realestate.com.
Yeah. Yeah.
you were just in the game. You just got in the game first. But for me, it makes total sense. But from a finance point of view, right, when we're talking, you're talking about extending relationships, if you've already got a property, you want that client to know that you've got a buying strategy for them, but their finance strategy also needs to meet your buying strategy. And
100%.
That's so key.
100%. That's the very first step. They've got to talk to you before you go shopping. I mean, you don't go to the shops without cash or a credit card, so you don't get on realestate.com without a pre-approval. It's dangerous, right?
Yep, 100%. Because the buying strategy also ends up saving you money, because if you're buying in a trust and you go and put a contract in their personal name, not knowing it needs to be in a trust, well, potentially and then you change the contract, could be double stamp duty, right?
That's right. Yeah, exactly.
So we don't want to do that. That doesn't move the needle forward. That costs people money. But also, going back to what is your buying strategy? Your buying strategy is going to be determined by the finance strategy.
That's it.
It's just as plain and simple. And this is where relationships and collaboration come into play. Well, I know that if we're working with a client together, if I've sent one to you or you sent one to me, you know what the finance strategy is and the debt structure. You may not know which bank. It doesn't matter what bank it goes to. You know, well, hey, this is our debt structure. This is how much cash I've got to play with. I've worked in your fee into the equity release because, again, because it's being used for investment purposes. It can be claimed at tax time, as well as an property expense or purchasing expense. So that's all worked in. So going in there going, okay, well, tick, tick. I don't know how other brokers work, but that's just how I work. It just goes tick, tick, tick. We're not leaving you off because they need to still have the cash to pay you. And if it can be in a deductible environment, that moves the needle forward for them as well.
Yeah, that's right.
Does that make sense? Or that
makes total sense, mate. Absolutely. So it's looking at all the parameters. I mean, before you go shopping for a property, make sure you cover your stamp duty, your buyer's agent fees, your solicitor fees. And just also build in, some properties might need some urgent repairs. Like you might be able to get a bit of a bargain because there's work to be done. So build that into your equation and go, you know what, if I could extend or get a better deal, I might spend 40, 50 grand fixing something up, So actually, just can I tell you one quick anecdote? We bought a property just recently for a client in Brisbane. This client was actually a financial planner himself, and budget around $750. We found a cracking deal in a great mid-range suburb in Brisbane. Investment property. Anyway, we put it under contract. We got a pest and building done, and we discovered there was a bit of a drainage issue under the house. So a bit of moisture, the water couldn't get away, and it wasn't a very old house. It was maybe about 10 years old, but it just hadn't been built correctly. They just hadn't done the drainage works. Now, the building inspector who was there said, it's going to cost like 30 or 40 grand. He made some ridiculous figure up. Now, the owners were pretty motivated to sell. So we used that to our advantage, and we managed to get a discount of 35 grand off the price. But then we got a second quote to fix up the drainage works, and it was only going to be 5 or 6 grand. So this is the thing where you get a second opinion and a real opinion on what was going to be required rather than just rely on one advice. And that was a great deal. So yeah, there's a case in point.
Well, they're up. What, 35,000 cost them 5? They're up 30 grand.
Exactly.
On purchase.
Exactly. Yeah. So yeah.
Take that.
That's right. Yep.
That's great. And then they do it up, and they still have money left over to potentially change the paint.
Yeah. There wasn't really anything else to be done, but that was just the main sticking point. Now, a lot of other buyers would have walked away. But, we said, look, it might take a couple of weeks, 2 or 3 weeks to get a thing, so you don't have the rent for that period of time. But hey, absolutely worth it, and it's not a terrible kind of major defect. It's a defect that can be fixed.
Yeah, and I guess when you look at the long term, that 5 grand, it'll take less than 12 months to make up that 5 grand in capital growth.
Mate, it'll exactly 100% right. I think. That's particularly. I won't say the suburb, but it was moving at about 10 to 12% per annum. It still is.
Amazing. And again, that's not even that. Then it's just like 1 month, and you made up your 5 grand basically.
Exactly.
If it's a percent a month, right? So, mate, that's a great find. So, talk us through that. Like, how long with that client? Like, how long have you been? What's your average time working with a client? like, what was the process? Just a really high level on that process
sure.
that you work with.
So great. So we've got a 7-step process we follow, Dion. So first step is get to understand the client, their financial capacity, make sure they've got a pre-approval, know their budget. Then we create the strategy and really work on a goal and pick a location that's going to work for them. Second thing we do is give them and flood them with research. So we say, look, let's buy in Springfield, or let's buy in Frankston, Victoria. And we give them suburb profiles and examples of properties that have recently sold. So it's like a benchmark report. You know what your budget's going to buy. So we just really educate the client up front and explain all of that. Then the third step is actually starting the search process. So we get the client's brief, as I say, we're out there looking every day, we're sending it out to our agent database, we're texting agents, calling agents, inspecting properties. So we do a lot of vetting and then shortlisting. So that vetting and shortlisting process, it's quite a time-consuming process. We use AI as well, but you can't just rely purely on the bots to find it. You physically have to get out there and wear out the shoe leather and chew up the petrol and get around the properties. And that's what my team does really, really well. So when we've found a property that we think fits the client brief, then we evaluate it. We do an appraisal and we guide the client on what we think we should pay for it. So independent of what the agent is quoting, because agents will underquote and overquote. It's a bit of a game of cat and mouse, particularly in Queensland, where often there's no price. It's ridiculous. So we'll basically advise the client on what to pay, and then if they're happy, then we go into the negotiation and the due diligence phase. So we'll organise to get a pest and building done if there's not one, or a strata search, and then we negotiate the price and the terms, get that accepted, and then we execute on the contract, get it exchanged, organise the the valuation, go through to unconditional stage, and then through to the settlement. So in the last step, we also recommend a property manager to them as well if they're an investor. So it's a full end-to-end process. How long does it take? Average turnaround times around 30 to 50 days. So around about 4 to 6 weeks on average. But some clients, like home buyers, might take a little bit longer if they've got a particular requirement. The fastest deal I've ever done is 2 days, right? Just because the right property popped up.
Easy. And I guess for that sort of stuff to happen, I think 30 to 50 days sounds about right. Like if I'm ever doing a pre-approval for a client, 90 days is how long it lasts. Personally, I mean, I'll do pre-approvals if they're very active and they've got a buyer's agent ready to go, right? Because the research I do basically gets you to a point going, well, I already know that, know your income, know this, know that, like all the parameters. And based on this, we've got step 1, debt structure strategy, get the equity released out, ready to go, so you can go put a deposit, make a fast approval, and knowing the speeds of the bank, etc. I can be pretty confident that they're going to get
awesome
pre-approved or approved, and just go through the process. And I could tell you my number one tip, because I'm going to get your top 3 tips, but my number one tip is be organised.
Yes.
Right? Come and speak to me before, or so that we can then start organising the team to get you. So that's tip number 2, get the team. And tip number 3 would be go slow to go fast.
Okay, interesting.
Because there's lots of flashy lights. It's like, this is a great deal. You don't, like having the team around you to advise you. Like let's say you're a time poor industry professional. How much is your time worth? Paying someone like yourself, Rich, and having your team do the work for you, and then just go, hey, here's our dump, here's a summary of the property, this is why we think it. How long does that take for that client to do? And you guys go do the negotiations.
Yeah. Well, I think most people on their own take around 6 to 12 or even 18 months to buy. And if you think about that delay factor in a moving market, like, again, I'll just use, obviously, Queensland example where you're based. The Queensland market, some of the suburbs we bought in last year moved 15%, even 20%. So Redbank Plains, like we bought a property in Redbank Plains beginning of January last year for about 600K. It's worth 750 today. Like that's a 25% increase in 1 year. So people quibble about paying 12 or 14 grand on a fee. and yet the market's gone up over 100 grand, right? So that's the thing. It's a false economy to think, oh, I'll try and do it on my own. And then even just learning the market takes time. It takes a lot of time for people to learn the market. So I use the example, if I want to buy shares and I need to know how the share market works, I'm not going to spend all my life trying to work out which share to buy. I'm just going to go to a stockbroker who's really experienced and got results, and I'll use them, you know. So I think people should have the same mindset when it comes to buyer's agents.
Yeah, it's how much is your time worth, and do you have the skills, knowledge, and expertise to make the right decision? And I think my biggest concern with someone doing it themselves is the emotional, and then you'll get an paralysis by analysis, and you just won't buy.
Yeah.
What's the point? You've done all this work, and I think half the problem, like, you know, people complain about, I'm not where I want to be, etc. It's because of the decisions you actually make.
Yeah. Yeah.
You're choosing, or hey, you can put your faith in someone and give it a crack. And this is why I love working with people like yourselves, because we work independently. You stick to the property, I stick to the finance, and there's no exchange of money or commissions. It's independent, unbiased, bespoke, tailored advice.
Exactly.
Based on your situation, your requirements, your objectives. And that's the best partnership you can ever have.
Absolutely. Yeah. Like I'm not going to fix my own car, right? I don't want to represent myself in court. I don't want to do my own tax. You know, I want to use other experts that can leverage my time and get a better result. And to your point about emotion before, a lot of people get really tied up with getting the right feel or, you know, the right outlook or something. But when it comes to investing particularly, it's an unemotional process. You've got to be detached from it. It's just getting the best opportunity you can.
It's numbers.
That's it.
Forget the emotion. Don't worry what the paint looks like. You can fix the paint. What are the numbers telling you?
That's it.
And I'm always telling my clients, it's going to sound bad, but you got to treat your investment like a business.
Yeah, absolutely.
You're running a business. You're getting income, and you've got expenses.
That's right.
I don't. That maybe I'm weird thinking that way, but yeah, I think very much that in that sense. But what are your top 3 tips? So in 2025, for someone that wants to either start their portfolio or grow their portfolio, what are your top 3 tips?
Oh, where do I start? Okay, so I think procrastinating is the thief of time. I see a lot of people procrastinating and waiting for the stars to be aligned, waiting for the election to be over, waiting for interest rates to drop, waiting for Trump to make more sensible decisions. Like, none of that's going to happen, right? So you're always going to have to make a decision when there's uncertainty. There's always going to be some left field thing that's going to happen. And, you know, I'm worried about construction costs or worried about, you know, whatever. Like, there's always going to be something that can distract you. So my first point is, don't get distracted. Make a decision to buy. And as you say, get the right team around you. Get that pre-approval. Get a buyer's agent on your side. Work out a strategy and get started. Second tip would be absolutely have a strategy. And if you're not sure, reach out for help. But work with a strategy. And then secondly, be thorough with your research. Don't cut corners. A lot of people I see sort of try to squeeze something and think, I think it'll be okay. You know, don't make assumptions. You know, make sure you do the right research, you get the right pest and build done, and make sure you're buying the right quality asset that's going to be there long term. Because essentially what you want to do, if you want to build a portfolio and retire one day, you've got to get assets that will support you in your later life. You don't want to buy a lemon that's going to have lots of maintenance, or you know, be under a flight path, or be a problematic property. You want, yes, the things will go wrong with the property. You're going to have to fix hot water systems and leaky gutters or whatever. But fundamentally, where it's located is going to be a crucial decision that you're going to need to make.
Sums it up. Pretty.
And I think another thing is, if I can say one more thing too, Dion, a lot of people have lazy equity. I'm sure you see this all the time. What I call lazy equity. So people have got good amount of money in their home, but they're scared about tapping into the equity in their home because they think they're putting at risk their family home. Can I tell you, I had to overcome that objection myself because I'd paid off my loan and what am I doing refinancing and pulling debt out of my home to buy property? But recycling debt is a great strategy to help you achieve your wealth goals faster. You know, a lot of people come to me, Dion, and say, "Oh, I've got an approval for 800, but I only want to spend 600." Why? Like, why wouldn't you want to buy a better quality asset? Like, the bank's already done the buffer rate. The bank's already assessed you very conservatively. So why not grab OPM, other people's money, the bank's money, and invest it and leverage it safely? Because that's going to achieve your goals faster.
Debt, you hit the nail on the head. Debt recycling is one of my favourite strategies to use, right? People have this affinity that they need to keep cash in the bank for a rainy day, etc. But if you've got an owner-occupied property, that actually eats away, because that's post-tax debt. That eats away at your borrowing capacity. But I see people with fully offset home loans. I'm like, well, why don't you just pay it out and we can just pull it back out again? Pull it back out, have an interest-only loan, or let's say you got 500,000 as a home loan, you got 400,000 sitting in cash. If you use that cash, it's not tax deductible. It's a waste of money. Let's put that 400 back into your home loan. Your home loan's now 100. You're paying repayments on 100. We're going to pull that 400 back out into potentially an interest-only loan, have an offset, so you got 400 debt, 400 credit. Until you use it, you're not paying for it, but it's there for you to pull the trigger. 400,000, you probably get a couple of decent assets for 400,000.
You know, the other thing I see, Dion, all the time is this: people have this debate in their head about paying down their home loan before they start investing. And they're thinking, well, my parents always said, pay off your home. But the problem with that strategy is that you're going to be then in your 50s before you start investing, right? You're going to miss 2 or 3 property cycles, right? So there's this, you've got to get the right, again, the kind of advice you give to help people go, you know what, it's okay to have a bit of non-deductible debt. That's okay, but you've got to start getting investment properties at the same time. So it is a balancing act. And I can tell you that owning a home and then buying investment properties is a great financial discipline, and it will help you achieve your goals.
Well, I'll give you my own personal example, because I'm about to go in about 4 weeks' time. I'm going to be a rent investor.
There you go. Well done.
I'm renting my property out and going out and renting where I want to live.
Great.
But, mate, I'm renting at 3.75% as opposed to paying a loan at 6%.
Yeah. Yep.
No brainer.
Exactly. It's just about using the money, because, you can use it wisely.
Cool. Mate, look, I'm going to leave it there because I know we can talk a lot more. But before we do go, just letting everyone know the information on this podcast is very general in nature, doesn't take into consideration your current situation or anything specific to do with you. If you want to talk more about finance or talk more about property, reach out to myself, but reach out to Rich, and he's going to tell you where can people reach out to you? How do we get a hold of you?
Sure. So my website, Dion, is propertybuyer.com.au. I've got a stack of awesome resources on my website. I've got a monthly newsletter that I personally write. I was an economist before I used to become a buyer's agent, so I get a lot of really good insights. I interview a lot of great people on my own podcast called the Property Buyer Podcast, so download that as well. And I've got blogs, a lot of blogs that I write about all different locations and property strategies. I've got a stack of free downloads you can get there. Actually, I've got one exciting thing to share with you, which I'll get you to road test as well. We're just creating what we call a freedom financial spreadsheet. So what we're doing is creating a spreadsheet that basically says put in your age, put in your income, and what income you'd like to retire on, and then let's work out a property plan on how to get there. And it will show you, based on some assumptions, how many properties you need to buy, when you need to buy them, and then when you'll reach your goal.
I'm happy to road test. I love tech, so I'm an early adopter.
There you go.
Mate, that's amazing. And you're also on Instagram?
Yes, on Instagram. Yeah, Rich Harvey Buyer's Agent. Yep.
Yep, great.
Yeah.
Guys, that's all we have time for today. I'm going to keep you guys hanging because we will get Rich back. He's a wealth of knowledge. But if any of you have found this information valuable, doesn't cost you anything to share the podcast, follow Rich, follow myself on Instagram at Dion Finance Specialist. I'm on LinkedIn, not hard to find. But also the Emerge Finance website as well. We've got a massive team that specialises in different aspects of finance. But everyone, till the next episode, I bid you farewell and speak to you guys soon. Thank you.